Got it. What's up, y'all? Sorry we are late. Welcome to the Anthony Lee Crypto channel. A little late start here, guys. I'm really sorry. Really sorry. I got caught out on the road and just getting back. I tried to change the stream, but I couldn't figure it out for my phone. So, y'all know I'm not technologically advanced. But we're back. Interest rate came out. Excuse me, no change. It was flat. So no change there. No big surprise. There's 99% chance to be flat, so we expected this. Let me see. Hang one second, guys. I'm sorry. I'm really scrambling to get in here. I am long. I took the long. Did anybody take the long with me that I gave in Discord this morning? We're past the copy trade thing. I'm not bringing that up. We're past that. We have moved on. We've discussed that. Did anybody take the long? It was a high risk long. I admit it. It was high risk. I may have to log out of this VPN. I'm lagging. All right, flashbang here, guys. Flashbang here. Let's go to FOMC. We already got the interest rate. We already know what that is. It's flat. We got the press conference coming up in about 25 minutes. It is way more important and creates way more volatility. So we will be live for that. We got some TA to go over. Let's see if the interest rate projection has changed for the next cycle. I'm gonna have to log out of this. This VPN is lagging me up. Give me one sec. June 17th, so nothing in May. So his last press conference is going to be next month. And as of now, there's a 97% chance they do not cut rates as of now. Matter of fact, I looked at this yesterday. I don't think they're projected to cut rates until maybe. You don't get better than 50% until December. December, you get better than 50% chance. But I have a sneaky suspicion that these numbers might change depending on who takes the chair when Jerome steps down. So basically, if you get a conservative pro-Trump guy in there, it's very likely that these rates get cut immediately, like in June. So could have some, depending on who comes in, which we probably won't know until May. But I think come May, we'll know who's going to take the chair, and that could be bullish leading into June, possibly. Because everybody knows Trump wants them cut like months ago. Who's here, guys? Let's take a look. Max. What's up, bro? Max took the long trade with you. So far, so good. Yeah, nice little pump here. I took the long trade from down here, 70,000. I think 70,875, something like that. I was looking for this previous week VWAP, and it got tapped to the dang dollar. I'm long from there. I've already TP'd one. I need to move my stop, as a matter of fact. I'm stop loss at the bottom here. I'm going to move my stop. If you're following this trade with me, I'm about to move my stop. I'll try to show you. I'll have to log back into VPN. I was trying to do that a minute ago, but I was laggy. I'm going to move my stop right here. Right below that low. It's not much of a move. Right now I'm like 70,790. So right here, right below this, so-called 70.8K. I'm going to move it up to 71K, probably 70,990. So I'm going to move it up to $200. $200. I did not want to take this trade with the copy trade. Oh, guys. Guys, if you want to copy trade me, you can do so on MEXC. There's a link. I'll hit it in the chat one more time, but there's a link in the pinned comment there, but there it is. Copy trade me. We have taken 20 copy trades, 21 copy trades and lost 2. Man, we lost a good one today. Lost a good one today. I'm not going to harp on it. We did a whole VIP live stream about it earlier. And so because we had a loss, our last trade was a loss, a good one too. But again, we won 19 trades in a row. So we were due to lose. Everybody's about break even, and that's okay, you know. But this was a low probability trade. This was a dang box, okay? Now, this was a dang box. So, dang green box that I give to you in advance. However, the price didn't just ease down into this. So, you know, with these boxes, you want price, you know, to kind of work its way down into this. You know, that's how you want to take it. This is catching a falling knife. I mean, price was just free falling this morning. So I just wasn't comfortable taking that on the copy trade. It was a higher risk. Every single time we came down the whole freaking way, pretty much with bullish divergence and just kept getting trapped longers, people trying to long, and it just wasn't happening. I mean, look at this whole freaking thing. Look. This whole thing, look, I'm on the 1 minute time frame. Look at that. The whole thing was basically bullish divergence, and it just kept going down. So it was just liquidations. It wasn't sellers, so it wasn't normal price action. Anyway, so when we got down here to the bottom, I just didn't want to copy trade this. So plus, for those of you interested in copy trade, okay, let me start by saying not financial advice, yada, 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 all that good stuff. You all know the spiel. But it's true. It's not financial advice. And nobody can guarantee you anything, and I am not guaranteeing you 100%. But I did tell the crew, the copy trade crew, that the next trade, I will not take another scalp trade, or at least something that I intend to be a scalp trade. The next trade that I take is going to be what I consider to be a very high probability day trade, to where I've pledged to them. Again, anything can happen, okay? And we're going to use good risk management, much better than we did this morning. I've pledged to them that I'm going to try to make everyone at least 50% of their account balance, their copy trade account balance. I'm going to try to make you your profit at least 50% of that. That's my pledge. And I've been doing this a long, long time. And you see I make $3,000, $4,000, $5,000, $6,000 trades all the time. And I've pledged to try to come up with another one of those for the next trade. That the next trade that I enter, I will believe with my entire being it's one of those trades. And if it's not, so be it. I'll try to make sure we make some profit and get stopped out in profit. And I'll try to re-enter if I still believe in the trade. So I'm pledging 50% P&L on the next copy trade that I take. So if you're interested in 50%, at least 50%. So if you put in $5,000, I plan for you to at least make $2,500 bucks. You put in $10,000, I plan for you to at least make $5,000. I really would like a lot more because I think Babylon 2.0 is here, and I think we're headed down to sub 60K. So we actually should make a lot more, but I'm saying at least 50% P&L on the next trade. That's what I'm pledging. So if that sounds good to you, I'm not guaranteeing it, but I will make sure it is a high probability that we get it. At least a high probability setup, which present us with a high probability opportunity to make that. I take these all the time. We were up so much in the last couple days on copy trading that I knew FOMC, everybody knows, I knew FOMC was a wreck everybody kind of day. FOMC is literally a home run or strikeout. And because we were up playing with house money, I just swung for the fences. I went for a home run this morning, and we struck out. Okay, that is honestly what happened. But I am so short. I am short and long, guys. I am short. All of you know in the Discord anyway. I went short here at 75.8. I think it's 75.810. I'm short. I know Max is short there. John is short there. I posted it when I took the trade. Several of you are short from here. I did tease some more P right when I longed down here. I took some more profit. I told you guys on the VIP long string. If we came down in here, I would take off about a 15 or 20% more. I took off another 20%. So I've now secured $2,100 in profit on that trade, and I'm up another $1,800, okay? So far we're up almost 4K on that trade. It's a pretty good trade. 75K down to 71K, $4,000 Bitcoin move. And I'm not going to promise you, but I don't plan to T any more P until 60K. That's my plan. Now, we could come down here and something could change, and I might, but I don't plan to take any more profit until 60K on this trade. So, which will probably pay me about another $5,000 because I've already shaved off 60% of my margin here. Anyway, that's the kind of trade I'm going to try to get the copy traders in. Link is in the pinned chat. Also in the description of the video. Copy trade me, get set up on MEXC. You never know. I know what I'm looking for now. Let me put it on here. So let's assume this is the bottom. Not the bottom, obviously, but let's assume this is the bounce bottom, if you will, right? And we're going to be moving up here to look for another leg down. Where might we look for the leg down? We need to know because Jerome could send us there. All right. I'm going to move this out of the way. I'm going to leave it on here. This is the dang red box I gave to you in advance, which we nailed. I'm going to leave it on here. I'm just going to move it out of the way because it's not valid anymore. All right. If Jerome sends out this means Jerome's going to have to be dovish, which is not likely. I'm going to throw on 3, 2, and 0.5 also. So that's from high to low. For those of you who don't know, usually, not always, nothing is always, but usually, and we go by probabilities, right? Usually when you have a reversal structure or market structure change, we look for, on the 1 hour time frame, three level drops. Same with the reversal to the upside, 3 level highs. Okay? This appears to be level 1, level 2, and you know the deal. Some people call it ABC, 1, 2, 3, 4, 5, whatever. So we look for a pullback and then a level 3 drop. So you got level 1, level 2, and wherever level 3 stops. Chances are, usually level 2 is the longest, right? So chances are this will not send us straight to 60K, although it certainly can. And if we delete this, you can see that it did here. Okay, it did here. But that doesn't happen very often. So what that would mean is you would get something like this, level 1, level 2, level 3, and then you might, this could be a wave 1 of a 3-wave correction. So this could all be a 5-wave structure inside of wave 1. Then you could have a 1, 2, 3 correction or an ABC before you came back for your level 1, level 2, level 3. Something like that, right? And then this could be the ABC correction. So that's A, B, C, something like that. Something like that. I'm not an Elliott wave guy, but I know I'm looking for three level drop. That's what I'm looking for. 3 level drop. So where could we look for a retrace? Well, let's dive in. All right, so I got the fib from high to low, assuming this is the low for now. Fib from high to low. By the way, we filled the CME gap. And I'm also going to throw a fib on from bounce high to low. All right, looks like a good area right here. We have the golden pocket from bounce high coming in confluence with the 0.5 of total high to low, right? We got 2 fibs on here, so looks like this is a good area here. I would probably extend to 702, something like this. Okay, perfect retest of the breakdown. You can see kind of the flat breakdown area there, right? Perfect retest there. I would be looking for there. Also, you got the 786 coming into confluence with the golden pocket up here. Remember, we got 2 fibs from 2 different points. Fib from the high, then fib from the bounce high. And these are coming in confluence with each other. Something like this. Of course, you could come swoop this high up here, but I don't like that as much. You could do it. You have to have a quick wick, right? You have to come up, quick wick it, and then back down like immediately, and you have to create some bear divs. Otherwise, if you start closing candles up here, then technically you will have changed market structure back to bullish. A wick is not bullish. A wick is a liquidity grab. It could still be bearish. Candle closures up here indicate market structure change. If you started getting candle closures up here, you would expect something like this. Okay? We don't want that. These are my 2 boxes, guys. These are my 2 boxes. This is where I'm interested in taking a continuation down for Babylon 2.0. We may not even get there. There's nothing that says you have to correct to the upside. Again, I am not an Elliott wave person, but sometimes these corrections can come in the way of what's called flats. You've probably heard of like a flat correction or corrective flats, or a zigzag where you just kind of zigzag in here and then head down. You don't really go back up there like a normal retrace. So we'll just have to see. But I'm not interested in shorting the zigzag. I'm only interested in these 2 areas here. Okay. So the next trade, assuming we do come up here, it doesn't have to be today. It could be tomorrow, Friday, whatever. Assuming we do come up here, guys, my next copy trade is going to be on one of these boxes, and I'm going to try to at least 50% P&L your accounts. So get in the copy trade with the link in chat or link in the description below. Do it right now. Because if Jerome does come out and spit some dovish game, we could come up here. We could enter this trade. I will have to log into the VPN or do it on my phone, but it could happen. What we got going? Johnny says interest rate flat. Yep. Hawkborn. Yo, what's up? What's up? Thanos, my main man. Zup. What up? Howdy. Thanos did not take it. Dude, the long trade. Long trade. Oh, shoot. I forgot to tee more P. I was going to tee some more P up here. I got busy chatting. Oh, well. I'm not really worried about that. Hawkborn took it. He is long. Good job. Carry Benz took it and went down and got out of break even. No, bro. This is a good little pump here. But good. I understand, especially after the trade earlier today. He said it got scared. Got scared. You should have put your stop where mine was, brother. If you put your stop where mine was, you're still in this trade. You know this. Your stop. And don't judge me. I lost a trade today, okay? I lost 2 out of 21. But you know your stop has to go on below the low. You know that. You know that. If you're not willing, if you don't catch the low, that's cool. This goes to everybody. If you don't catch the low, that's cool. Let's say you don't even take it till here. Okay. I don't care where you're taking it. Your stop has to go below the low. And if you're not willing to lose that much money, let's say this is $500 in drawdown to go below the low, and all you want to lose is 100, all you're willing to lose is 100, you don't want to lose anything, you have to either not take this trade, or you have to reduce your margin by lowering your leverage or removing some of your account, so that if you do go to max drawdown below the low, you only lose $100. You have to. You have to. I'm glad you broke even, but your stop is here. Like, let's say you didn't catch the low, but you had to put your stop there. Let's just see what would have happened. Let's say you got in at the blue line. That's a 1% gain. I don't know what you had, but let's say you did $3,000, 20x leverage, 1% gain, made 600 bucks. Oh well, no big deal. Good job, bro. Broke even. Sometimes break even's a win, especially on a day like today. Ugh. Not long. Eons is not long. Salt Chain, what's up? West Coast. Guys, I posted this yesterday. All right, we got the press conference coming up in a few minutes. So I posted this yesterday. We got this super ultra powerful 4-hour sell signal on Bitcoin. It's very rare. We've only had 2 of these this year. One of them gave you like a almost 40% dump on Bitcoin. The other one gave you like a 12% dump. And then we got back-to-back, like snake eyes here. I don't know. I'm sure it's happened. But I don't recall ever seeing back-to-back 4-hour sell signals like this. That's pretty crazy. And sure enough, boom, big old dump-ola down. We rolled the dice, like I think right in here, actually. We rolled the dice earlier on a bounce long. Got a little bounce, and then, I mean, like literally I took the trade. It started bouncing up. I said, okay, all right, I'm going to go pour another cup of coffee, which took me about 2 minutes to walk in there, pour some coffee, come back, and I come back. I mean, literally, price was ding, 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 and then it bounced. We entered our long. It went ding, ding, ding. I went to go get some coffee, and when I came back, it was like here. I was like, oh my gosh, what in the world happened? And so by then I was committed. I was committed to the trade. I was like, oh gosh, I'm committed. I should have cut it because it wound up going like this. And finally I cut it down here. Not really down there, you know, price isn't even there, but you get the point. Let's see if we can get find old Jerome and get this queued up. You know, him and Trump hate each other, right? Trump wants rates cuts. They're in a feud. Y'all all know. It's nasty. I just don't see him cutting rates. If for no other reason, just to defy Trump, that's it. They didn't cut, but I don't see him come out here being dovish either. So if this is your first time, Jerome's going to come out. He's usually right on the dot, right on time. He's going to give some like 3 or 4 minute prepared speech. It's the same damn thing every time. The Federal Reserve is committed to seeing our 2% inflation. The same thing every time, exact same thing. And then he opens the floor up for Q&A. That's where the volatility happens. That's where he starts throwing shots. They'll say, well, you know, since unemployment's up, why are the rates not getting cut? And he's going to be like, because Trump sucks. I disagree with him. I like Trump. But that's not the point. The point is he usually tries to throw little, and they're subtle. He doesn't ever come out and say super hawkish things, but it's subtle. You can pick up in his tone. And he's only got one more press conference after this, and I just don't think he waited to the 11th hour to all of a sudden bend the knee to Trump. So, could get pretty bearish. Who knows? Anyway, guys, if you will, when I bring this over, when he goes live, I'm going to turn my mic off, and I'm going to turn the sound on for the press conference. If it's too loud or you can't hear it, somebody please quickly let me know, because I don't want you guys to miss this. And if I need to jump in here or there, I can, or I can type on the screen if there's something we need to pay attention to, or if I take a trade or whatever, okay? So, but somebody please let me know pretty quick about the sound. Now check out our Mississippi Lee's page, guys. Hey, guys, in the VIP Discord, you remember how we were doing VIP yesterday, live stream, and Jane Marco'd me? I put that on here. I put it on there. I was like, haha. We went on a Harley ride. Y'all know we have a Harley. Anyway, I put that on there for everybody to see. Jane be a Marcoed. Uh-oh. All right. So somebody let me know pretty quick when we get into this thing how it looks for Jerome. He should be going live in about a minute. Babylon 2.0. I'm going to be watching price action on another screen, or do you want me to put it on this screen too? Do a side-by-side. We do something like that. I think that's cool, right? That way I can watch this, and if we see something I need to get in a trade, I can type here if I feel like something's important. All right, I'm going to go ahead. Excuse me, I'm going to drop to the 5-minute time frame to watch this. Y'all let me know about sound. He should be getting started here in about 20, 30 seconds. Get on the copy trade, folks. Let me know about sound. I'm going to cut my mic now. But if you have any questions or comments, throw them in chat, and I'll be happy to type them out as needed.
And inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. We see the implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Colby. Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods. And on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumer's going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. We don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah.
About
so there'll be an offset.
Offsets, yeah.
So that's true. We're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period of time, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision-making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%, and I think it's important that we do that. Very important.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis, and we're waiting for that process. it takes 8, 9, 10, 11 months a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now is just kind of on that borderline, the higher borderline of restrictive versus not restrictive. And we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services, but we're not seeing progress there. So we do, what we expect for next year is what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality, and I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent, really, growth in the labor force, which, of course, we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now, that's balance, okay, but you know, I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So, you know, we look at that, we see it, we get it, and I mean, everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless, it's something we're watching carefully, and you know, are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and you know, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years, for sure. And it's just a very different thing, and a much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But, you know, has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And you know, the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But you know, there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering,
All right, let's come back in. Unless somebody just wants to hear this, but he is hawkish AF, and I don't see that changing. So we fully expected that. He talked about the investigation he's in on. If you can't hear me, make sure my audio's come back. Somebody let me know. He talked about the investigation that he's under. That's from Trump. And they're just firing shots at each other. This is a pissing contest. He doesn't give a damn about what's best for the country. And I'm not saying I know what's best as far as interest rates go, right? But he doesn't care. He's going to defy Trump every chance he gets. So he's being very hawkish. That's why we're dumping as soon as he opened his mouth. So unless you guys want to watch this, we'll just skip over. He's not saying anything other than just blah, blah, blah. Interest rates might go up later. Certainly not going to get cut because we're expecting inflation to go up because of oil, because of this, because of that, because of blah, 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 blah. Very expected. So, Wayne88, is my audio low? Info Digital Choice, is my audio low? Anybody else having audio problems? Is that better? Is that better? Is that better? Can you hear me? Can you hear me? Can you hear me? Wayne says audio is good. Carrie Ben says it's good. I don't know. Y'all let me know. My goal is to figure out this mic. It's so weird. That's what I'm saying, man. All good. Everybody says it's good. I don't know, brother. Everybody says it's good. I tried to turn it up. I don't know. I'll take a look at it later. Good now? Okay. All right, cool. So Wayne asked if I got stopped out, which I got stopped out, made like $700 on the bounce. Where would I look to long again? First of all, we're catching a falling knife, guys. We fully expect a rotation down to 60K. Okay, but of course we should get a bounce somewhere along the way. Let me take this off. Understand this, guys. If you are trying, especially you newer traders, you expect we're going to bounce somewhere along the way. Yeah, most of the time we do. Okay, yeah, you're right. Most of the time we do, but we don't have to. Literally in this same dang area. Look, see where we are right here? Look, let's trace it to the left. In this same dang area. We fell all the way through to 60K. We didn't bounce anywhere along the way until we hit 60K. So we don't have to bounce, okay? We do not have to bounce. So you are playing with fire if you're trying to long this. I understand. That's how it happens. You know, you go down, you long the bottoms, you short the tops. But we're expecting a rotation down to 60, sub 60K. Make no bones about it, okay? Now, again, we don't have to go in a straight line like we did this time. It could be a little more constructive move down, which is what we kind of hope for. I don't know. I kind of like to rip the Band-Aid off and go. But I expect it to happen pretty quick. Let's see, last time we made this move, the low was here. Kind of same thing. You kind of came down into this move on one candle, really two candles, but you just kind of came down. No bounce. And then you got the bounce. Came around here, chopped around. We've covered this before, but let's cover it real quick, and maybe we can glean what might happen here. So we came down here, no bounce, just straight down. Then we came and chop. You set a high, okay? We swooped the high, so we took out the high here. Then we did the old, I call it the loopity swoop, and came back up and took this high, right? So we took that high, then we took that high, and that's what rotated us down. All right, let's look at current price action, guys. And then we're going to come back and see what it did. So you came down, no bounce. Then you got the big bounce, chop. Loop, loopity swoop. And now we're rotating down, we think, okay? When we took this first loop, we took the high here, right? Took the high, and then when we came back, we took this high, okay? Took that high, rotating down. So what happened when we rotated down? Let me erase some of this. I think you get the point that it is dang near is exact. Let me clear it up. All right, so when we started the move down, you had a couple days when you really started to get into the meat of this move down here, you didn't bounce, like at all. I mean, you can't count this as like a little base. See the wick? You probably can't even see the wick. It's so small. You didn't get a significant bounce until you came into, we're fixing to move down pretty aggressively, I think, guys. Until you came down into this lower belly area here, right? You came down into here, this kind of lower, real thick of the thick of the meat section right there. That's where you finally got a bounce. That's your support zone. You got to bounce. You got to bounce there twice, and then it was just down, which we expect the same. And I've shown this before. I have the key on here. So we come down into the belly of this thing before we get a bounce. So be careful of trying to trade this right now. So if we come like we did last cycle, which is very likely, but I'll show you something else in a second. The belly of this thing is right here. Clear to see. This is where the thick of it is, right? Point of control, red line right there. But you can see that's where all the price action is. Anything above here is pretty much fast move up, fast move down. Don't be surprised if it come all the way down here before we get that bounce. It would be in par. I would call this the key kind of right here. You can see where these candles failed to close below, right? You got candles failed to close below. When you did close below that orange line, look, fast move down. Close below the orange line, fast move down. Close below the orange line, fast move down. But you failed to close below here. Failed to close below here, 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 here. Okay, that was the good support and resistance line. Very evident support and resistance line. I would call that the key. Okay, that is your key to lower prices right there. That line. And we have one of those now. Key. Okay, and you see when we did finally lose it over here, it was just straight down, right? But also, this is the area you came down in this very same move. This is the area you came down to get your bounce. This is the area you came down to get your bounce. Oh, I deleted my key. All right, this is the area you came down to get your bounce. You see that? That's where you finally got a decent bounce before coming back. And you got your second bounce there, too, at the key. So we could jump all the way to the key, which I have marked out. You can see right here, anytime, here's our key. Anytime you close below it, straight down, you bounce from it here, and it's probably easier if I extend this over. I know some of you can't see that. See, you bounce from it here. Bounce from in here, bounce from in here. You close below it. Boom, fast move down. You bounce, 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 bounce. So don't be surprised to come literally, look at this, guys. You know how many people have their stops right here? If you hit into this, you're going to have a liquidity spike so fast. You're going to come here. You're going to have your uptrending level of support, right? Right? You're going to have your key level. You got a weekly level, a daily level. Don't be surprised to get the bounce there before rolling over, okay? And I've had this box on the chart. Let me clear it up just a little. With the words, be careful here. This box has been on this chart. Be careful here, okay? Because if you lose it, that's the key. If you lose the key area, I don't think we just rotate down and bounce a little lower. I think we go all the way down. You're going to run into these relatively equal lows right here. Boom. There's going to be liquidity spikes. Once you tap into those, there's going to be liquidity spikes, and it's going to be like gunpowder. Boom, boom, and then you're probably going to come take this one. Okay, the question is, do you bounce here? Is that it? Is that it? Or do you rotate lower? And I personally think you come lower. But I'm a buyer here, and I'm a longer here. However, literally, guys, don't be surprised. Don't be surprised if you don't bounce until you get to this key. Look at this. You've seen it 1,000 times. I can't tell you how many times I've shown this. Look at this price action. None of these lows are taken out. Look at them. None of them. You're trying to take one right now. You didn't quite take this swing low right here. You didn't quite take it. If you take this low, not only that, you will rotate back into this value area range, right? You rotate back into the range. So you would expect at least a move to fill these, right? Big liquidity spikes right here. Bam, 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 bam. Like dominoes, they're going to fall. It's going to take you into point of control here, which is going to take you down to your key. There's really no other area I would long right here. This was the only possible long. There was another daily naked point of control. I already erased it. A daily MPOC, previous week VWAP, and the CME gap was all right here. All that was right here. I took that long, $700 profit, stopped out. I'll be honest. I mean, if we move up from here, it moves up without me. I just don't see it. I don't see it. I don't think we bounce here at all. If we don't bounce right now, if we come take this low, if we come lower than this VWAP, and we get into this, we're coming for the key. I would look to long there. I would look to fade that long for lower. And I look for this to happen pretty quickly by the end of the month, which falls in lines with our March stats. So I hope that answered your question. It's probably not a great answer for you, but it's either now or 66, 65.5. And even then I think that's a failed bounce attempt. It's worth, in my opinion, it'll probably be worth trading. But you guys have all seen things like this, where none of the lows get swooped, none of the liquidity gets taken. When you come into this, it is going to be a fast move through these. I mean, there'll probably be one daily candle straight through. But if you're on like the 5 minutes, it's going to look something like this. You're going to probably SFP each one of them. SFP, SFP, SFP. But the whole daily is going to look like one red candle. See how, like I'm on the daily now? See how this looks like one red candle? Yeah. And we go to the 5 minute. It's going to look like this. It's going to look just like this. Just like this. But you go to the daily, you don't see any of this drama. You just see a big red candle. Be careful, guys. If you're not in a long trade already, I wouldn't. On the flip side, you know what we're looking for if this bounce does play out, which I'm stopped out, and I'm okay with that. Made $700. You know what we're looking for to the upside, to short back down, because we have confirmed bearish market structure. Okay, we have confirmed bearish market structure. Faux show. Not only did we confirm it up here, right? We flipped that. We've now flipped it here, which means we have 2 level drops in. So we got level 1 drop, level 2 drop. If this is finished, we could either expect sideways chop for a flat or pullback, and then the level 3 drop wherever that may end. I'm hoping for a pullback. Another short entry. I'm already short from here. 75.810. So now it's just, do we drop from here or do we pull back a little and then drop? But there is no long opportunity for me anymore. You're going to form like this little, in my opinion, this little head and shoulders type deal. I'm not a big pattern guy, but like a little shoulder, head. If you get the pullback here, shoulder, and it's going to give you 1, 2, 3, 4, 5 wave down. Somewhere down here, probably to the key. You know, a little mini head and shoulders in here. Broke the neckline, straight shot down. You're going to have a bigger one here. That's what I'm hoping for. Get one of these boxes. Break the neckline right here at that value area. Something like that. Takes you right down to that key. Takes you right down to the uptrending line of support. Get a bounce there. Probably a decent bounce. Then take you down to your bear market bottom. Noah says could bounce 69K at daily. Could. Not likely. Very unlikely. Very, 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 very unlikely. Very unlikely. Any of the Anthony Lee crypto crew, I'm not knocking you, bro. But any of the Anthony Lee Crypto crew, I encourage you not to take that trade. 69K at the daily, giving you a high low. I encourage you to not take that trade. That is a trade that will fail almost certainly, in my opinion, for all the reasons just mentioned. But most importantly, that 69K level. I know this chart's getting a little messy. We got things everywhere. But let me get rid of the VWAP. What he's talking about, I'll throw 69K on there. That's 69K. However, at that point, you're going to be getting into why I think it would fail. First of all, you'll be back in the range. So, law of the volume profile says you rotate back down to the point of control. However, 69K is right here in all of these wicks. And you, in my opinion, you're just going to start knocking out long liquidations. You're going to see that big. That's the final one, which means that's the biggest one. Because everybody that longed right in here, maybe not these guys, a little far away, but everybody that longed this 1, 2, 3, 4 wicks right here, long liquidations here that are already there, if you can trap fresh longers right here, people that long that swing failure pattern, if they can get trapped in addition to the ones that are already there, you could really see a big, fast move down here. I'm talking a big one. Look, it's already thin through here. It's already pretty thin through here. You already kind of got some pretty fast moves through here. I mean, look at this. One candle, one candle, one candle, one candle up, one candle down, one candle up, one candle down. It's already pretty thin right there. I would not entertain a trade right here. Best case scenario for me would be point of control, but we really haven't been holding point of control too much. Look, every time you've come to it, just kind of quick fall through to the key. 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 Quick fall through, front run the key, but quick fall through nonetheless. Quick fall through to the key. Even back here, quick fall through to the key. I think if you get, honestly, guys, I think if you get into this, and I know I'm being repetitive, I think if you get into this, if you take out this, really, if you come back into this range, I think you're headed to the key pretty fast. I think you're headed to 65, 66K right here pretty dang fast, in my opinion. Which fractal, Carrie Benz? Hey, daily no, that daily is, all right. Yeah, take that. If you take that trade, Noah, let us know how you do with it. There's zero chance chance I'll take that. But I could be wrong. I mean, I just, it's a low probability. Very low probability. It doesn't mean it can't work, and I hope it works for you, bro. I really do. It's just going to work without me. Which fractal, Carrie Benz? Yeah, bro. Hey, I'm not knocking you, brother. I'm really not. I hope it works for you. I'm just trying to show you reasons why I can't. Here's the thing I try to teach my group. You should look for reasons not to take trades. And when you're in trades, you should look for reasons to get out of them, okay? It is so easy to find a reason to take a trade if you want to take a trade. It's so easy to find a reason to get out of a trade if you want to take some profit. Because we can talk ourselves into anything, right? So it doesn't take much convincing for me to do something I already want to do. So what I want to do is look at it and say, why should I not take this trade? Like well, what are the negative sides of this trade? And if there's a lot of reasons not to take it, I shouldn't take it. Because we're blind to things that we don't want to do. So it's real easy for just like, I should take this trade. It's a swing low there and a 20-day SMA. Yeah, there you go. But why shouldn't you take it? Well, because there's a whole bunch of liquidity spikes here. Whole bunch of relatively equal lows. There's thin volume that always goes to point of control. And in fact, every time except one crashes through point of control down to the key. Those are three really strong reasons, not to mention you're closing back inside the range. There's 4 really strong reasons not to take that trade, which puts that in the low probability category. even though the SMA is there, even though it could work out, it is low probability because there's at least 4 strong reasons not to take it, at least, just at glance. Not to mention, by that point, we will have changed market structure. You could still get a bounce, but we'll have changed market structure on the 12-hour. We haven't done that yet. See, the 12-hour market structure will change right here, which is about 70K. So if you come down to 69K, you will have then flipped bearish market structure here, right? Right? You'll then, even if you do get a bounce, you would expect lower. Right now, we don't have that. Right now, 12-hour, you're still holding higher highs and higher lows. Oops, higher highs and higher lows, right? Right? But not if you come to 69K. You can then expect lower highs and lower lows. Doesn't have to happen. But that is the nature of switching market structure. Hey, LC crew, do not take that trade. Not financial advice, but I highly encourage you to not long 69K. And if you do, treat it as scalp. Take profit quickly. Stop loss where it goes to entry or to the low. And fully anticipate to get stopped out, but just protect yourself. I'm not saying you can't take trades. Not saying I don't take trades. But that is one trade if, I won't, but if I did, I would certainly treat it as a scalp. And if it turned into a runner, great. Freaking awesome. And I hope it works out for you. I really do. I won't take it, but what I would do with that market structure flip, if it did, I would look for the retrace short trade back down. That's where I would be more interested in if you got the bounce there. Personally, I don't think you will. I think if you're going to get the bounce, you're going to get it here from 70K, this daily naked point of control and value area high. If you're going to get it, that's where you're going to get it, my own opinion. If you don't get it there, my opinion, the next real bounce, I'm not saying a 10-minute bounce. You can't get a 10-minute bounce, $500-600, and then down $500-600. You can get those, and they're scalpable, okay? But the next real bounce is going to come down here at the key, in my opinion. Either value area high or the key. I would rather value area high because I want in this. I'm already in this trade from up here, but I want a second entry in this trade from my copy trade group because only 3 or 4 of my group took this trade. I want the rest in it right here. So I would love this bounce. I don't mind this trade here. Okay, I hate it at 69K. I like it at 70K. I know that sounds weird, but at 69K, you flip market structure. You get into these liquidity spikes. You found acceptance back into the range. I don't like it. Oh, good, brother. Good. I'm glad. If you don't come here much, you have to watch it. Like, I never mean to offend. Like, I'm just a straight shooter. Especially when it comes to your hard-earned money. You don't want somebody that's going to up here and blow smoke at you and try to just tell you what you want to hear. No, man, I want somebody that's going to look at my question honestly and objectively and tell me, yeah, this looks great, or no, it doesn't, and this is why. That way I can look at it and be like, oh, I see what you're saying. God, I didn't see that. So whether you agree with me or not, you know, I'm always going to shoot you straight. Always. I'm not a blow smoke up your ass kind of guy. I'm not going to tell you what you want to hear. I mean, I might, but only if I mean it. I'm never going to just sit here and BS you. And that's what I see. I might like this trade at 70K because at 70K, and I know I'm being repetitive, but at 70K, you have a daily naked point of control. Okay, you have a daily naked point of control, 2 daily naked point of controls actually, right there. You have the value area high. At least on the 12-hour, you can still barely, but you can technically still maintain bullish market structure. See, you're going to lose it here if you lose this at like 70.1K, you're going to lose it. If you close below it, now you can quick wick it, But if you start closing candles below this, you will flip market structure, okay? So if I'm going to bounce trade along, I rather this area. While I did not find acceptance back in the range, that's another thing. You close below this, you find acceptance, confirmed acceptance back into this range, which means rotation at least the point of control. You flip market structure bearish, which means rotation down. You get into these liquidity spikes, which means stop loss and liquidity spikes down, right? All of these reasons tell me that 69K is a bad long, but 70K still has slight potential because all these things I just mentioned, you do not activate if you bounce from 70.1K. Now, it may just be temporary. You may just bounce and then come get them, but it is a much higher probability bounce trade for me than 69K. For me, just from what I'm looking at. But it's Bitcoin. Bitcoin can do whatever it wants to do. Bitcoin wants to bounce from 69K to 300K, it can. He doesn't really care what Anthony Lee thinks. Either way, my next trade, whether it be here to there, or whether it be here to there, or whether it be here to there, is going to be a short down. Actually, I would consider longing here for sure. But no matter what, whether you bounce here or bounce here or bounce here, I'm definitely shorting this thing back down. Definitely. I just don't know where I'm shorting from yet because I don't know if this dump is over. Caribbean, so we've moved fractals, bro. We've moved fractals. You may have missed this part we showed earlier, but we're now on a different fractal. We're on this fractal from above. This is price action here from November of 25 through January. This was the original Babylon, right? The original Babylon. We just showed this, but I'll roll through it very briefly. You come down here with no bounces all the way, just crash, 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 crash. Then you bounce and you set a high, right? You set a high in here, right? You bounce and then you start chop, 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 chop. You swoop the high here. You swoopity loop back down and then you take that high out, right? You take that high and then you're out, okay? So let's fast forward to today. Right? Crash down, no bounce, no bounce, no bounce, bounce. You set a high, chop, 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 swoop that high, loopity swoop back, take that high out, right? Take that high, and now we're working on this right here. Okay? I know I got it real messy here. Let me go back to the daily. That was 12-hour. Got a little messy. So this fractal would now be this fractal. Because the fractal we were looking at from 2022 did not take the high. So we just took the high, right? Just like here back in January, we took this high. So we took the high, loop down, swoop up, take the high. Just like here, we took the high, loop down, swoop up, took this high. Now we're moving down. We're looking for this move down to new lows, just like we did here. Took the new high, moved down to new lows. We're looking for the same thing here. Babylon 2.0 is activated. I am short. I gave you guys this in Discord. I'm not talking about the copy trade stuff. I gave you, before I started copy trade, I gave you this. 75.810. This is the one that Max was talking about, and John. We're all short from here because we were looking for this swoop of the high. When we realized the 2022 fractal was invalidated, we started calling for this, and I had this dang red box. You see it? The box was up there well before we got into it. And it was sitting here for like 2 months. All right? But this is before we got into it. It's been sitting here like well before that. I mean, see, even when we were down, well, you can hardly see there. I'm not zoomed in, but here you go. You can see even when we were down here, it was up here. This box has been here. Well, we have finally made our way into it. Here's what I took it. 70. I am short from 75,810 right here on the non-copy account. I posted this. This is right when I took this trade. Posted this trade. I'm short for 75,810. Let me see. I post so much stuff, I forget. Anyway, this is where I posted it. Told you I was short from 75,810 right here. Boom. That's it. So we're short from there. So this is the fractal we're looking at now. And really more than anything what we're looking at is this portion of the fractal, not necessarily this, even though it's just chop. Chop's chop. So let's see. I know this chart is really busy. You can see that. I don't know. I hope you can see that. So it just kind of perfectly overlays. And now we're somewhere in here. Probably be a little easier to see here. Kind of see how this plays out. And we don't have to go as low as this. This is being the probably final leg down. Doesn't have to move down as much. It can. Doesn't have to. There you go. You can see it now. Much better. Looking for something like this. This has it coming down probably a little lower than I like. You know my target. I mean, we certainly could come down there somewhere around 49, 50K. You can see that just like that. So we've already come from this top here, And again, this doesn't have to play out candle for candle. From the top, we've already moved significantly further back down, which means we're probably on this candle right here. Yeah, probably on this candle right here, which comes back down to the bottom of this candle, which is where we are now. Then you kind of bounce, and then it's just kind of down only. So you may get a little bounce back in the next day or so, just a little. Not even all the way up to the top. You can see it didn't even come all the way to the top. Just maybe halfway up this candle, which would be great. And that's going to be it. Ding, 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 ding. Hey, brother. Noah, don't let that discourage you, man. What's wrong with trying to long 70K? Why 69? Why not long 70? Or if this thing moves fast, why not just hold out for this 67K or 66, whatever it is, the key. Don't force a trade. If it's not a good trade, it's okay. The 70K might be a good trade. 70K might be a very good trade. You got 2 daily naked point of controls and a value area high. As long as you don't get accepted back in the value area high, then you don't follow the volume theory, right? Which says rotate to point of control and eventually value area low. So that is negated if you don't get acceptance back in there. Plus, you don't hit these liquidity spikes, which are going to shoot you down really quick. So that gets negated. 70K might be a decent bounceable area. I hope it is. I hope it is. Because I want my copy traders in this trade. That would go in line with this fractal we just looked at too. Because if we're there, if we're on this candle, if we're currently on this, and again, this doesn't have to play out exactly, but if we're currently on this, then we could potentially look for a little bounce back candle here tomorrow or Friday, right? You see that? Little bounce back before rolling over. This one bounced back. Let's cover about half, maybe a little more than half of today's candle, which would be perfect. You'd bounce somewhere around here, 70K. Come back up here. I could get my entry for my copy trader guys, and then we could all ride this thing down together. Because John and Max and I are short from here. And I think Crypto Hunches or Brad, one of the two. I don't think both. I think Crypto Hunches is short from here too. I can't remember which one messaged me in Discord. One of them is short. I've seen their P&L. And that's in the VIP Discord. So anyway, I would like to see a bounce here. Pull back. We'll fib it. I'll short the copy traders. Those of you are just joining me, I have not guaranteed. I cannot guarantee you anything. Bitcoin do what Bitcoin do. Bitcoin may want to go to 500K tomorrow. If that's the case, we're going to get wrecked up here. But I have told you guys that I pledge to do everything I can to give you the highest probability chance at a 50% P&L trade on the very next copy trade that I take. Very, very next one. Not the one after that. Now, guys, I explained this to you in the private Discord stream earlier. And you know, anybody that's done this stuff with me long enough knows if we come up, let's say our trade line is there, it may take me 2 or 3 times to get into this because I'm not going to go into drawdown. So if we take it and I enter as we pull back, TP, I may get stopped out, but then I'm going to enter again if I see what I want to see, TP, and I may get stopped out. So it may take me 2 or 3 trades to get in this. So I don't mean if I get stopped out for a $25 gain. That's not what I mean, okay? Because that's just how I trade. It may take me 2 or 3 times. I'm not just going to sit here and enter the trade. I think it's going to go here and let it go 20% in drawdown and then come my way. No, I'm going to try to close it at a break even or slight profit, then re-enter, break even or slight profit, and then get in the trade. But anyways, my next trade that I let go, I've pledged to be very high probability, in my opinion, 50% or more profit. So I pledge to you guys. Because I feel so bad about losing 2 out of 21 trades. Any other questions, guys? Good questions, Noah. I like looking at that. I would be very curious if we get there and you take that trade, how that works. I'm liable to forget. In fact, I will forget about it because I'm not interested in it. But I'll be curious. So I hope you come back and let us know. And I am not one of those. If I was wrong, you come back and you get in my Discord. Link is below. You post that P&L card and rub it in my face. And I will say I was wrong. I was wrong. But either way, guys, regardless if we bounce at my level or Noah's level or the key, my level, Noah's level, or the key, regardless, I'm telling you, the way is down. Isn't it funny? I know you guys watch other folks and see other thumbnails and this and that. Isn't it funny? And I told you guys this the last few days. We get this little move up that we shorted the hell out of, And everybody up here is calling for 84K, 90K, 100K. And now everybody who was calling for 90K on Monday is calling for 60K today. It's like, y'all are terrible. Unfollow. They're so wishy-washy, guys. So wishy-washy. And they were the same guys that right here were calling for 60K before they flipped to 90K and back on 60K. And watch what I tell you. You listen to me. You listen good, y'all. Whether we bounce here or here, once we bounce, they're going to be calling for 94K. Oh, look at that. High or low. We're still in an uptrend. We're going to 90K. Like, no, bro, we're rolling over. It's just a bounce. This is a dead cat. It's not really a dead cat, but you know what I mean. Same ones. They're in the moment. I don't even want to call them traders. Most of them aren't traders. They're in the moment chart folks. You have to be able to, if you're looking at macro, you have to be able to glean into the future. In order to do that, you cannot look at what's going on today. I don't care. You can't do it. You have to be able to look at, you have to be able to interpret historical data. Doesn't mean it has to play out the same. But you have to be able to, how does Bitcoin perform at this part of the cycle? How does it perform historically at this part of the chart? How does it typically perform at this pattern? Not how does it perform on this candle? And I'm not always right. But I'll tell you what, one thing all of you can say is I don't flip-flop. If I'm wrong, I'm wrong. I say, hey, I'm wrong, and I have flipped bullish. But I don't flip-flop on my analysis. Because I'm not analyzing minute by minute. I'm looking at the big picture here, guys. I'm looking at the big picture. I'm going to show this one more time. Those of you that have seen this the last couple days are probably tired of seeing it. But I know I got a couple new folks on here today, and I don't want them to be buying into everybody else's BS. The bottom is in, blah, 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 blah. Well, guys, plain and simple, pay attention to this if you haven't seen this. Current cycle, right? Where's our last cycle? Back here, last cycle. I'm going to go through this with the last cycle, but you can go through it with all the cycles if you want. Okay, so when you're in an uptrend or a bull market, both uptrend, bull market, whatever, you're going to get bottoms that look like this. Boom, up. Boom, up. These are lower lows. They create what? Bullish divergence. Up. Boom, up. When you start getting lows like this, you go down. You go down. You go down. Then when you finally flip it and get bottoms like that, you go up. You go up. You go up. Oops, that should be there. You go up. Right? And then when you flip it again to bottoms like this, you go down. You go down. You go down. You go down. Or, I'm sorry. Flip it there. You go. I messed that one up. We got the lows. Excuse me. Now we switch to higher lows here. We go down. Higher lows, down. Higher lows, down. Higher lows, down. Higher lows, down. Then when you finally can flip it, then you can go up, right? So let's fast forward. Let's look at current cycle. You get the idea. So we go to current cycle, right? We come out of the bear market. Boom. Start making lower lows. You go up. Lower lows. You go up. Lower lows. You go up. Lower lows, you go up. Lower lows, you go up. Lower lows, you go up. Well, now we flipped again. Now we're making higher lows. Higher lows. Higher lows. Higher lows. And we're still making higher lows. We've got to come down and make lower lows, right? You got to make some lower lows. It doesn't have to look exactly like that, but you got to flip this to lower lows and springboard off. Look, you come down, you spring off of that. You come down, you spring off of that. Come down, spring, spring, spring. Oops. And in the bear market, you don't get that. You get lower lows, which is like a diving board. You bang and then come down. Diving board, boom, and come down. Diving board, boom. Diving board, boom. It's not till you get down here and start forming these lower lows that you can create the good bullish divergence and spring off of that. Great, got a low. We don't have that yet. You don't have that. You don't have that. We don't have it. We've got to have it. We don't have it. We're not. Bottom's not in, guys. Bottom's not in. Yeah, stocks are starting to break down. I saw that. I was looking at those earlier. Gosh, let's look at what is the Dow doing on the day. Dow's down 1.6%. For those of you that don't follow this kind of stuff, 1.6 down on the day for the Dow is huge. I mean, it's done bigger. It's not record-breaking, but it is a big drop. You're dangerously close on the Dow to flipping a macro bearish structure. Dangerously close to bearish. You've already flipped some local stuff to bearish, right? You've already flipped some local stuff to bearish, right? Right? But you're dangerously close to flipping some macro stuff, which could be bad. I'm not calling for this, but you're close. You're close. These are two relatively equal lows here. If you take one, you're going to take this other, and then you could get into this, and you could maybe come bottom right about here. Maybe take this wick, and then go back up. It's probably what would happen, in fact. It's probably exactly what would happen. Right there at the 0.5 fib. Come take that low. That's probably what will happen, in fact. Get you this nice little head and shoulders pattern here. All right. You guys see it. Makes sense. 0.5 fib. You've already flipped market structure locally. This is going to flip your market structure on a more macro time frame. Relatively equal low here. You take this one, you're going to spike into this one, and then you're going to hit, just like we talked about, Noah's with that 69K, or you're going to hit these. Can take you right into that 0.5 fib, liquidate this group, and then move back up and out. Can you imagine? That is another 6-7% dump for the Dow, which would probably be about a 20% dump for Bitcoin, give or take. Let's just say 20. Current price action. It's going to put you right down to these targets, 55K. I'm telling you guys. Stuff lines up, which for your precious altcoins is going to give you about another 50-60% dump, which would be great. I'm not complaining. Let's say 50. We called to take this low out on fetch, October 10th low. So what would 50% be here? Look at that. Look at that, guys. You do the math. Will it play out? I don't know. Nobody knows. But it sure is shaping up to look like it, right? This, and I believe, guys, I believe this is going to happen really fast. Faster than you think. Everybody is calling for a bottom. Almost everybody's calling for a bottom. October, November, like always. I genuinely think we bottom in March. Maybe first week of April. But I genuinely think we can bottom in the next 2 weeks. Now, that doesn't mean bottom and bull market on, okay? I don't think that at all. Okay? I don't, let me be clear, I don't think that. What is this? Things just appear on the chart. It probably looks something more like this. I'm on the daily time frame. Wherever we bottom, it may not be a straight line down, but you get the point. Come down here, swoopity swoop, 55K, and then I think we bounce back to this area, and I think we spend 4, 5, 6 months here. This was a big range right here. The last time we were here, that lasted, I think, 7 months. See? I just think we swoop this low. I don't necessarily think we come down here and live down here. I could see us getting, just like when we came and took like each of these lows, right? We took the lows. Each one of them sucked us back into this range. Each one of them. Swooped the low, sucked right back into the range. So I think we swooped the low, sucked right back into this range, and I think we live here before, probably through the summer. Move up and out and fall. I think we have a sped up cycle. I think it's over by September, end of September 2027. Shemitah. We're going to do a whole stream on Shemitah. About the time, I'm calling for it, about the time that everybody else is going to say the bull run should be beginning, parabolic phase, blah, 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 September 2027, I'm calling right now that it's over. It's over. Part of that will be confirmed, not necessarily confirmed, it won't be confirmed until then, obviously, but in my mind, part of that will be confirmed if we bottom in March or first week or so of April. If we bottom there rather than October, November, like always, that is how you know we are sped up in this cycle. Because it takes a long time to form a bottom. I mean, you can V-shape a bottom, but you've never V-shaped a bear market bottom. It takes time. You form it, and then you go. So if you wait till October to get there, you're probably on the same. But if you get there in March, April, it usually takes 6 months. So that means by the time October rolls around, you're moving up and out. Rather than starting to form the bottom, you're moving up and out. Bottom's been formed, but for 6, 7 months by that point. It's just my opinion. And nobody else will say that. I doubt. Until it's too late. Until we're up and out. People are going to be saying, oh gosh, the bottom was in March. Oh my gosh. Well, by that time, Bitcoin's going to be halfway back up through a bull market, and they're going to be FOMOing in. You watch what I'm telling you. You watch. And people are going to think I'm crazy until it happens. I'm telling you, if you don't know what the Shemitah is, you're missing out. So the only way Bitcoin has a true bull market, if the Shemitah is going to hold, which it has ever since the Bible, the only way Bitcoin has a bull market, traditional type bull market, is if it starts early. Because the traditional bull market style would suggest that we get the halving in what? I don't even know when the halving is. But by the time we're getting the halving, we should be starting it, but it's going to be over. It's going to be over. When is the halving? April of 2028. So we could get another bull market. I think we'll start to get that one probably September, October of 2028. But I don't think we'll get anything like that until then, except for the earlier one. Anyway, you guys know what I'm saying. I think we're going to have a shortened bull run and a shortened bear market coming up. I really believe that because of the Shemitah. If I had to put this on a timeline, I would say something like that. September 2027. And I know you can't really, it doesn't really show that dates that far. Then you're going to have April 2028. And then like September, October 2028. So I think we're going to look something like this. Bing. Ding, 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 ding. Like this. And then I think it's going to be like this. And here's the halving. And I think you're going to start another one like that. That's what I think it's going to look like. That's my prediction. And this will be winter, September to October to December 2028. So like October 28, and this is September of 27. And this is the halving, which is April 28. And actually, I don't think price is up here by then. I think it's more like this. And then you start going. So we may not get as high as a normal bull run in September 27, but I think you're gonna set a new high. I think you'll set a new high by then. That's what I'm calling for. All right, guys, do you have any questions before we go? It's been a long stream. I know Bitcoin still just moving down. Moving down here, guys. Probably going to, well, we might double bottom here. I don't know. I think we come into these daily naked point of controls, though. Retest value area high. Any questions, guys? We'll take them now before we go. Edgy. I don't know who would have come into the room and left the door open. Come here. Come here. Oh, there's the bubbies. Oh, you want to say hey? Look, say hey. He's saying hey. You want me to punch you in the face? Punch you in the face? That's Edge. The Doberman. Okay, guys, no questions. I'm going to get out of here. It was a good stream. Jerome was bearish, hawkish. That's okay. You know what we're looking for. If you're interested in a trade, I will let you know if I take this 70K-ish trade. Noah has sworn to come back and let us know. Oh, okay, never mind, Thanos. Forget what I just said. He corrected me. The next Shemitah is September 2028. So this actually is perfect. Ignore everything I just said. Ignore everything I just said. Ignore everything, and all of it's crap. So we're here. This is the halving. Let's fix this real quick. Halving, right? Then we got September of 28. Right? So most of the time you have a halving about 6 months later. I mean, you kind of grind up a little, but about 6 months later is where you start the parabolic run up, right? So I think we come down, come back out, chop, 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 chop. Then you get the halving like this, grind up a little, and this is where people are going to be expecting that parabolic move, but instead of getting that, it's over. It's over September 2028, which will be about a year ahead of schedule. I'm telling you. But we're going to bottom here in March and April, which is going to be about 8 months ahead of schedule, 7-8 months. So we're going to top 7-8 months sooner-ish, a year sooner. Watch what I tell you. I got the Edge. Want to see him again? Listen, this is the most neediest dog you've ever seen. Come here. He's the neediest dog you've ever seen. He's always, he's talking to you. He's always got to be right there touching you, always. Look at the camera. Hey. He's a big boy. He's about 100 pounds. Yeah. He's about 100 pounds. The Edge. He's got his head in my lap right now. All right, guys. I'll let you know in Discord if I take, we're moving below 70K or 71K. I will let you know if I take the 70.1, 70.2, 70K. I'll let you know if I take this trade. Noah's has vowed to come back and let us know if he takes the 69K trade. He's going to skip the 70K trade because he likes the 20 SMA, the daily 20 SMA. No, I got to show you something else, man. I'm sorry, guys. If everybody else leaves, that's cool. I got to show you something, bro. And I know just because it's happened before doesn't mean it has to happen again, but you may not have seen this on the channel. Be careful, dude. So this is the 10-day time frame, okay? I want you to please watch this, Noah, because I don't want you to get wrecked, bro. 10 days time frame. I'm looking at the yellow line is these are 10-day EMAs. The yellow is the stop edge, is the 21 EMA, 10-day EMA. The 55 is green, and the 200 SMA is purple, right? So we've only gotten this 4 times in history of Bitcoin. I know that's not a lot. Okay, 4 times. 10-day, right? So when we got it here back in 2015, we got the cross. The very next 10-day candle, you set the bottom. The very next one, okay? You got it here in 2018. You got the cross. The very next 10-day candle, you got the bottom, right? Okay, you follow me? And on this particular one, let's see. You got to pump up. Yeah, you got to pump up about 6%. Okay, pump up about 6%. Actually, this is pump up about 6%, and then you move down and set the low. Okay, you follow me? So 10-day cross, the next candle after the cross, 6% pump up, then you came down and set the low. Same thing like you did in 2015. Same thing, same exact thing. Okay, last cycle, you got the 10-day cross, very next candle, same thing, you set the low. I understand, I acknowledge, we actually came and set a low later. That was the SBF, Sam Bankman-Fried, FTX scandal. Without that, for all intents and purposes, this low, I know you took it out by like $1,000, big deal, but you pretty much, you set the low here, big scandal here. It was a big dump, okay, liquidity event, but still, got the cross, very next candle, you set the low into the 200 SMA. Okay, we got the cross here. On this past candle, got the cross. So this is the very next candle. This is the very next candle. This is the one that every single time in history we have set the low on, this 10-day candle. We have 3.5 days left on this candle. We have pumped up 8%. Remember, we did 6.5 previous, 8% here, and we're headed back down. So I fully expect this candle to close red, and in fact, not only close red, but I expect you to set the low. I know what you're thinking. That's a long way to go. You got 3.5 days, and this is Bitcoin. And you got a lot of folks who have long. Go look at the long liquidations, guys. Do we really got to do it? Uh-oh. Oh, gosh. What is going on? It's not pulling up the heat map for right now. I don't. It's got me logged out. It is like 8-1 long liquidations to shorts. So when you start knocking into these folks, you're fixing to rip to the downside. 3.5 days to get down there is nothing. You did it in 1 day from here last time, right? 1 day, a massive liquidation spike down. Don't think you can't do it again in 1 day. You have 3.5 days to get down here. And it's happened every time in history. Doesn't mean it has to happen this time. Just be careful with 69K, okay, bro? That's all I'm saying. All right, guys, I got to roll. Me and my Velcro dog got to roll. I mean, he's literally right here with his head in my lap. Literally. Like, literally. He's a daddy boy. Daddy boy. All right. We got to roll. I love you guys. The Lord has blessed us. It's a good day. The Lord has blessed us, even though we lost the copy trade. I'm pretty bitter about. We're going to get a big one next time. I'll see you guys. I'll be in Discord. Bitcoin moving down. I got to go watch it, guys. We might get in this trade.